The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks, and we are in a historic time frame, in my opinion, because this is the most positive day for statistics in the market in history for the whole year. 80% of the time, the market will close higher the day after Christmas, which is quite a substantial statistic to say the least. No one wants to be able to fade that, no matter what they're doing. There's no question about that. The other thing that is here that I think is important to watch is the fact that we have the Dow Jones Industrial Average has actually made a gap today. It gapped up. It closed at 16,360, and then it opened at that was the high on Friday where it closed, and then the low today was 16,370. So it left a gap of 10 points. I can promise you this: if that gap's not filled, I am going to quit, because there's only been one gap on the Dow Jones Industrial Average in all the years I've been studying it since they began, and that was in January of '91 when we had the Desert Storm War, and that made the market gap up. It was the single biggest up day we've ever had, in the market, since that time. So we have to watch that gap that we left today. And this is a very positive month. I mean, you got the Santa Claus rally. You're up in the month. You're up in the year, 30%. I mean, they even had Darlene Love singing at the New York Stock Exchange on the closed Christmas Eve, which was really cool. And I don't ever remember anybody singing a song on Christmas Eve at the New York, or any day at the New York Stock Exchange. But it was really very entertaining. So we've got this. I'm only going to spend a few minutes here on the stock market, and then we'll move on to we'll move on to some other things that are very important, especially gold and some of the other markets that we watch quite a bit now. We have the gap up today that I mentioned in the Dow Jones Industrial Average, and I'd like for you to write this down. This number that I worked with over the last few days. Just look at the longer term cycles and watching everybody being bullish and everything. And if you remember, back on March the 5th and March the 9th, that was between the 5th and the 9th, the market made a double bottom on a daily basis, very quick. No one very saw it as a double bottom, but in fact it was. But that low on the Dow Jones that day, I believe the low was actually on the 9th. It was just a few ticks lower than the one on the 5th, as I recall. And that one came in at 64.66. And if you had 10,000 points, you're going to come up with 10,646. So the Dow has been up 10,000 points in 5 years. And I think that's probably a big record, if I'm not mistaken. On a percentage basis, it's probably not, but on a point basis, there's no comparison, I'm sure. But we're coming up, and that number, that 16,466, is also the 1.618 expansion of the November to December price swing. In other words, if you took the November high, the November low that we went into the FOMC, and then the market on the upside has expanded to this 16,466. The gap that we left today, folks, that will be filled. I mean, that's not, we're in a 9 or 10 day run in the Dow, which is an outlier event. It's just a question of, when it does it, and we'll see. Well, if it doesn't, then I've looked at technical analysis far too long, and maybe this is the one time that it is different, but we'll wait and see. We have of course, we got the new moon coming in on the Tuesday, which is New Year's Eve, and then, of course, we're closed on Monday. So the 2nd of January should be a very, very interesting time. Of course, we have the January effect, which means that the small cap stocks like the Russells and some of the NASDAQ stocks have a tendency to gain on the big board stocks, the stocks at the New York Stock Exchange. Okay, let's get down to business. Our fearless leader has been bullish gold for some time. Tom O'Brien has been talking about this for a great deal of time now, and I wanted to show you, I believe we have made a pretty good bottom in the gold market. My target that I was looking for was just about, I'll post this in here, if you'll give me a second here. I made a New Year's Eve to not have any technical difficulties in the computer for 2014. But anyway, it was supposed to bottom around the 19th of December. It bottomed on the 21st of December, and now we've had a 5-day rally. Hasn't been very much, but that's how it starts. So we think that there's a really good chance that the gold has made a pretty good bottom in here and has a chance for a pretty substantial rally. I think it looks a lot better when you look at the gold stocks, which of course have been batted down, quite a bit for a considerable amount of time, and you'll see that it also had the same type of a pattern forming. I'm going to put ABX in here because that's the one that is going to look at this particular thing here. Hold on, let me a second. I have a question here from one of our devout listeners. Someone asked a question about the Bradley model, and believe me, folks, the Bradley model, it doesn't drift. I mean, it stays at the same spot. The problem is I misinterpreted. I knew the October low was a low because that was simple. That was a beautiful 61% retracement of the August low, and it had been down several weeks. And so that was simple. But what happened when it got to November 18th and 25th, I thought that would be the downturn into January, but it's gone straight up. And if you look at the Bradley model that I posted into Tiger TV today, and you look at it, you'll say, well, it's actually done pretty well. It's just that my interpretation of it has been wrong a few times. And maybe it's going to do a rare thing like invert on January, between now and January the 2nd, and, go straight up again. I guess that's always a possibility. But we'll have to, wait until you see that, so we see that happen. So we'll have to take a look at it. All I know is these patterns that I'm looking at, they've not changed very much. I mean, they've gone a little bit higher, but that's it. The gap in the Dow Jones today really means something, folks. That gap that is very, very important spot. You have to pay, really strong attention to that. Now, the next one we're going to take a look at today, because of the commodity hour here, is the gold market, because we are right at a really good spot here where we've had a pretty good spot to take a look at these metals. We'll do silver right after we do gold, but we've made a beautiful ABCD pattern. It came within $8 of the exact low that we wanted to look at, and that stretches back over the last 5 months. The time down in the move was perfectly equal from August through October, and the time down in October through December has been nearly perfectly equal. It was off by just 2 days, which is pretty good when you think of a 6-month time frame. That does a very good job of picking where you want to be as far as the time that you're trying to look at the thing. And this is what Tom's been watching. What Tom O'Brien has been watching for a long time is a possible turn in these, and they're starting to give you that. What it does is it tells you that you're able to be at a spot where you don't have to risk very much, because if we go into new low ground below 1170 in the gold, that would tell us that there might be something really wrong with the gold bullish scenario that we're watching. But as of now, it's spot on as far as I can tell. It looks like it's ready to turn at any time. And the next one we're going to take a look at here is the silver market, because that's even more bullish, because it had a higher bottom scenario where the gold did not, and that's I think is very important, because silver has been beaten up even more than the gold market. So if we take a look at the silver market here, oh boy, nothing like having a winter cold, especially as much traveling as I do. Anyway, we will take a look at silver now, and as you can see that it's had the ABCD pattern complete, but it made a higher bottom than the gold. This is a big divergence. Not many people pay attention to that. I'm sorry to tell you today, but Mark Douglas could not be on today or tomorrow, but he is going to be on Monday. He promised me to come on Monday. He's got a new book coming out that's got a video attached with it. It's really going to be really very, very good. It's already, he's taking, orders on it already, and they're doing very, very well, and so it's really great. But he's going to put a good show on for us. And by the way, Marshall, I meant to tell you, Guido is not upset at all. That's okay. That's a little private joke between one of the Tiger people and myself. But Sarah wanted to thank you that Guido was not able to go for lunch today. So we'll have lunch without you. Anyway, the silver and gold, I believe, have already turned the corner to the upside. Copper, it still looks like the weak sister of the bunch. It's made lower highs. For quite a while. We had a little Gartley that worked for the last 8 or 9 cents, which is good. But the overall, the copper market has been in such a disarray that it's, there's not much you can say, that it's just been very, very bearish for 2.5 years. Whether it's going to turn the corner here or not, we'll have to wait and see. But in fact, if the market doesn't, turn up here, it's going to be, really quite interesting to see what happens with this overall thing. Just 1 second. I wanted to show you the weekly chart on silver because it's got a potential here that we could make one more jab down here in silver at the 786 level, and it would be very unusual, but it would be $2 lower, and I don't believe that it's going to make a big move to the downside, on that. So I believe that I think we've made a pretty good bottom here in gold and silver. We're up about $35 in gold. We're up about $1.50 in silver. So that's the first starting signs that these markets are probably getting ready to, have a pretty good move. So we've got the Dow Jones up about 60. We've got the 60 or 70. We've got the Nasdaq is up about 8, and the S&P's up about 5. So there's just not too much happening right now, but we did have a gap in the Dow Jones, folks, and you don't see that very often. That is, you just got to circle that price of 13,600. 16,360. That was the high of Friday, and the low today is 16,370. That's a gap that will most probably will fill because we're in an exhaustion part of the move. We're up, I think this is the 9th day. We're up since the 2 days before 1 day before the full moon that we had on the, I believe that was the 8th, and now we've got the new moon coming in very, very shortly here. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm going to talk a little bit about wheat because we're having a very interesting situation coming up from a trading perspective. And that is that we have the March wheat futures have come down and are making a long-term 1.27 and 1.618 expansions on the long-term charts coming in on Monday. And also remember we have the new moon coming in on the end of the year. Holiday, of course, is January 1st, but the wheat is one of the very, very best things to work with lunar cycles, folks. These lunar cycles in wheat have been posted on stone tablets from the Babylonians going back 8,000. Well, the Babylonians were 6,000 years. The Sumerians were 8,000 or 9,000 years, but the Babylonians had it on stone tablets about how to look at wheat with the full moons and the new moons. It also talked about the planet Mercury in wheat harvest. And this work was done by Dr. Andrew Lowe at MIT when he wrote his book, The Evolution of Technical Analysis. He spent the first 55 pages of that book talking about the first technicians were actually astrologers and astronomers. And I do know that the wheat market responds incredibly well to to new moons and full moons. In fact, the high that it made on December 2nd was also at a new moon, and that was at a perfect 50% retracement of the move down during November. Now we've completed the ABCD, so we could be looking at a move of around $2,000. And the risk here is going to be very, very small. The risk here will be less than a nickel. So we want to be looking to buy the wheat come Monday or Tuesday into the holiday weekend, and then of course we'll keep a stop working. But that's one of the trades that I'm setting up here to look at. It's been a really good short on the way down, because once we broke the 640 level, it was telling us that it certainly wanted to go down another 40 cents, and it's been able to do that, very, very easily. So that's something that I'm watching very, very closely in the market is the wheat market, and it looks like it's got a pretty good chance. Remember that we've had a really bad, no, it's not bad if you're short, but the bearishness that we've had in the corn market, and then also the wheat market over the past 5 or 6 months, has been another sign of some deflationary pressures that are out there. We've had the same thing happen, of course, in gold and silver and platinum, palladium. Just about everything has been hit pretty good, and part of this is because the people that run CNBC and Bloomberg, if you ever notice, whenever they put a chart up, it's always to show you what their bias is at that time. They showed a chart of U.S. Steel today and showed how bullish that chart was. Well, they only showed the last 6 or 7 months. They should have showed a year or two to see what U.S. Steel has really done. And they do the same thing with Bank of America. Bank of America used to be a $68 stock. It's trading for 15 and change. So you have to remember that when they're doing these things, that they're pretty much giving you the perspective of what they are told to do, is what I think, because why wouldn't they show you the longer term time frame on these things? And that's the main thing. And another thing that happened today was they were talking about the fact that the bonds and notes are getting hit pretty badly, and that means interest rates are going to go higher. And of course, we're going to cover those when we come up with a break, because we're breaking below key support levels. And remember, just 18 months ago, 18 short months ago, we were up and around the 153 level, and that's making the big butterfly pattern and completion at that time. And so it's going to be quite interesting that whether this bottom is going to hold somewhere in the bonds and notes. But right now, it's looking at very, very clear that the interest rates have been going higher for a long time. We've been saying that. They're lower for the Federal Reserve people, the banks of the Federal Reserve System, and they're lower from the brokerage houses and stuff. But there's very little do we get any of those things. The 30-year mortgages have gone up 25%. They've gone from 3.7 to 4.3 in just a matter of a few short weeks. So that's another thing that you want to remember, that these things have gone up higher and not lower, like the Federal Reserve is basically trying to tell us. I have a very good friend on Wall Street. He and his wife runs we got to take a little break here. When we come back, we're going to cover the bond market.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and someone has talked to us about, they're asking a question about the Federal Reserve, which had its 100th birthday on Christmas Eve, and it was December 24th, 1913. It was formed in Jekyll Island, and I think that's in Georgia, and there has only been 3 people that have really come out strongly to challenge the Federal Reserve since that time. One was President Garfield. He was assassinated. Albert Einstein. Abraham Lincoln. Oh dear, where's medication when I need it? Okay, Abraham Lincoln was the second one, and the third one, of course, was John Kennedy. John Kennedy had a 5-year note that was going to be coming out. It was a 5-year Treasury bill. $5 Treasury bill, and but he was assassinated by a lone assassin, Lee Harvey Oswald, shooting a 1928 Mannlicher Colcano rifle, 7.62 milliliters, that couldn't hit a barn door if you were inside the barn. But we'll not go into that. Anyway, I wanted to talk to you about the bond market, because the bond market is, many, many times bigger than the stock market, and it's been coming down for, quite some time here. And I wanted to mention one of my very good friends, Byron Tucker, who I'll have on the show sometime this coming year. He's on Wall Street. and he has been at the Merck for many years. He was the right-hand man of Leo Melamed at the CME and partly responsible for the development of currencies, the S&P 500, and just a lot of different things that he was involved with, during that time. And of course, the bond market, when you look at it, it's been under a great deal of pressure. And, we're breaking down below really a key support now in the notes and the bonds. And that's the real tragedy to have here is that this market is going lower at a time when it should be going higher. So we'll see if that's going to be the case. But what I wanted to mention to you here is that over the weekend they were at some Christmas parties back in Connecticut and in New York. And these guys are with the really sharp minds on Wall Street, and they had a discussion about this quantitative easing. After 5 of these people talked, and they ranged from Harvard to Yale, Princeton, Amherst, University of Chicago, none of them could really say what really QE2 was about, QE3 or whatever they want to call it. They really didn't. They really couldn't explain it to each other well enough to see it. So I don't know what it means. It just means kind of funny, because if that worked so well, why weren't they using it for the first 96 years of the Federal Reserve? I don't know. Back in 2007, when I was really bearish, I was looking at a 170-year cycle, which was the the Saturn-Neptune 170-year cycle, which is a very strong cycle. Because you can imagine 170 years, but it goes back. It went back to the crash of 1835, and it had to do with the banking system failing. Now, I thought that was in 2007, 2008, and there's a possibility that I missed this by 6 or 8 years because of the fact that it's such a long cycle. I don't know. All I know is that these patterns that I look at, everybody's bullish in the stock market. I don't see that, so I guess I'm wrong, and have to. I'm waiting to be on Tuesday's my day. Tuesday's the day I look at it, because that's the day we have the day after the new moon. We got a gap in the Dow Jones Industrial Average. Hello, that's going to be filled. So we'll just wait and see. However, bonds and notes are, they're getting hammered again. They're going lower and lower. Notes have already taken out last week's low by quite a bit. And so it does make a time for wondering what's going to happen with these interest rates, because there's a lot more bondholders, folks, than there are stockholders. And, maybe they're taking all their money out of bonds and putting them into stocks. Who knows? We'll have to wait and see. Whether that's going to happen or not is what we'll have to wait and see, because I really have to wait and see what's going to happen in January. That's the key time for me as far as looking at the stock market for a potential short. And then also I'll be watching this price in the Dow Jones of 16,466. We're 21 points away from it right now, which means we're not too far away. We're getting closer and closer by the minute. So we'll see if that's going to be the spot where it turns or not. But that's 10,000 points from the low we had back in March of 09, and if you guys remember how bad things were at that time, they were scaring us to death, and they gave us the $770 billion TARP program, and then the market, that was in October, the market didn't bottom until March. So I believe that cycles are there. I just think that, whether they're going to work this time, I'll be surprised if they don't, but, I get surprised a lot at my age, so who knows. I want to bring up the note chart here because it's even larger than the note market, the Treasury note market. And these are the shorter term rates, 2 years to 10 years. But the note market is really in worse situation than the bond market. It is really breaking badly now to the downside. I'm going to put both of them in together, and you'll see that this thing is really starting to cascade to the downside in the notes and the bonds. This is such a bad, not bad, it's showing you the bearishness of the bonds. That's the bearishness of the bonds really means a lot, folks, because these markets, these markets are combined. They're probably 10 times or more bigger, or maybe more than that. I think it's at least 10 times bigger than the stock markets. So, you know, this is some people are losing a lot of money in here, and this is not this is widows and orphans and, you know, savings account type stuff. So this is not a good thing when the interest rates are going much higher in the bonds, and that makes us, the notes that the Treasury, the Federal Reserve are issuing to us, we have to pay more interest on that because the Federal Reserve issues the things to the Treasury. They buy those, and then the Treasury pays us, the Treasury, our Treasury, we pay the Federal Reserve. Whether we get that money back or not someday, I don't know, but they say it is, but they don't have to report the accounting, so no one really knows if that has been going to be the safe. So we'll see. You know, it's going to be interesting, to say the least, as they say. There's an old Chinese curse, may you live in interesting times, and it's a curse. So we'll see if that's going to be the case. But I don't see any reason for the bonds to be bottoming in here at all. They broke below. They're almost a full point below the 786 retracement, and the bonds have already taken out. They're heading towards the 1.27 expansion number. That will be down around 116. That'll mean the 30-year bond will be above 4% in just a matter of a few days, given what we're looking at now. So all that is very, very important. I've had a request to take a look at the corn market, and so we'll take a look at the corn market now. It's also been under a great deal of pressure for quite some time. We'll be looking at the hold on one second. I'll get the March corn up here. And you'll see that March corn has been going down forever, well, almost forever, at least for the last 7 or 8 months. And we are at the price where our good friend Mr. Mr. Zitow in the room for Tiger TV has talked about this for many times. We're still trading at 425. That was the price that he told us, you know, way back in the summertime. It was his number that he was looking at, and he was spot on with that. My hat's off to him. He is certainly a big follower of the grain markets and does a great job at it. And also what's happened today in the corn is we've had a really strong gap down, you know, down about a nickel, which is in a quiet ranging market like this, that looks like a lot, which is in fact it is in a holiday atmosphere. There's no question that that's excuse me, what you're looking at. So we want to watch that very, very closely. Okay. So someone asked me a question about this gap in the Dow Jones Industrial Average. Folks, the Dow gapped up today. That means every single stock in the Dow Jones Industrial Average had to open higher. Well, yeah, it had to open higher, otherwise there wouldn't be a gap there. So all 30 stocks opened higher. You know, we'll see. Okay, we got a call from Bill in Missouri. Are you there, Bill?
Yes, and that's what I was calling about. I don't see it on my daily chart today, and I was wondering what your numbers, it gapped from what number to what number, and what number to be filled.
Okay, now maybe my data is wrong, but if you'll give me 1 second, and I checked it 3 times before I came on the air because I thought the same thing. I said to have a Dow Jones chart that would gap was just really amazing. Now, the one I posted on was the one I had for the Bradley model, and I show the high of Friday at 16,360, and the low today that I have in the Dow Jones is 16,370. That's a gap of 10 points. Now, I'm going to do one other thing. I'm going to go to the 30-minute chart shows the same thing. We have a gap in the Dow Jones, Bill. I'll double check it with Reuters tonight and also CQG, but there is a gap in the Dow Jones today.
Well,
and if I'm wrong,
a 15-minute chart, I can't see it on the 15th. I guess I switch it over to my 30 right quick.
What quote service do you use?
Scott Trade.
Okay. Well, I use CQG and I use eSignal and what's the other one? Yeah, eSignal and also CQG. CQG is never wrong. Well, I shouldn't say never because once in a great while they are, but it's certainly lined up just the way it should. I mean, it looks like a gap to me.
Okay, do you have any numbers, Larry, that you might quote us? Or you just
Sure.
did? You just
Yeah, well, let me give them to you again. It's 16,360 was the high Friday.
That was a high Friday, right?
Wait, that's not Friday. It was Tuesday. Excuse me, Tuesday. I keep thinking today's Monday. Jeez. Wow. No, Tuesday was the day before day before Christmas. So Christmas Eve, the high was 16,360. That's just about where it closed. And then today's low on the Dow, I have at 16,370. That's 10-point difference.
Yeah. I wonder why it don't show on the chart. Maybe if I go to the 3-minute chart.
I don't know, but that's what the number is. In 1991, Bill, when we had the Desert Storm with Storm and Norman Schwarzkopf, and we had the one-day war.
I remember that.
Yeah, well, that was a new moon. That's when the Navy SEALs were in there, putting all the smart bombs with the lasers and stuff. And so the planes came in and took everything out right away. So it was a one-day war. The next day, the Dow Jones gapped up more than it's ever have. The Dow, I think the stocks were up 7% that day. I happened to be long that day, and I remember it very well. And it's never filled that gap, and that was down around 2,800 in the Dow Jones. That's the one gap that I've never seen filled yet, and that was it would have been 22 years now. I've never seen that gap filled. So that was a very unusual day, of course, in the markets. That was the day that crude oil dropped $11 a barrel from 42 to 31 on its way to $11 a barrel.
So when we close below 360, we might become bearish and watch it awful close.
Well, it will be I don't know about bearish, but I don't think you're going to see any bearishness until at least January 2nd when the new moon comes in. That would be my guess. So we'll see if that's going to be the case or not. But, that's all I'm looking at right now.
All right, Larry, I appreciate it. I'm much more clear on the next few days,
Well, let's watch it because there is a gap there, Bill. I'm 100% sure of that. I checked that 3 times before I came on the air. I wanted to make sure that was a gap, and there is a gap there. That's very unusual to have a gap in the Dow. That's quite unusual.
Okay. All right. Thanks, sir.
Yeah, Happy New Year to you, too.
And you.
Okay. All right, we're getting confirmation from other folks that are looking at their charts that there's gaps in there, so we'll see if that's going to be the case or not. We'll know soon enough, and then we'll be able to go on to the next one. The thing that I'm really watching now is this Dow Jones number at 16,640. What is it? Let me give me a second here and pull it up here again so that I don't misinterpret what I'm looking at, because that is a really important number. The fact that it's we're still a little ways. Yeah, that number is at 16,466, and we are 17 points away. So it's very, very close. We'll probably hit it while we're on the air. There's not much time left. We got the Dow up about 75, it looks like, and NASDAQ up 10. 1, 2, 3.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV the hourly chart also of the Dow Jones Industrial Average, and it also shows the gap that exists there at the level that we're looking at. It's at 16,370, and we're up about 70 points from that level today. So that's going to be an interesting phenomenon to look at. Now we've had a request to take a look at natural gas futures, and being an Italian, I'm certainly one of my favorite things is natural gas. So if you'll give me a second here, I will get it up. We'll do the daily. We've had a lot of cold weather, as you know, and we had a hold on one second. There it go. There it is. This is a challenge when you get to be okay. We had a really nice Gartley down at the bottom there, and now we've made a double top in the natural gas, quite a bit higher. It's had a tremendous move, and we're up around the 441 level. This should hold it for a bit, and we've gone from 330 to 441. The 340 level was a perfect 61% retracement. Now we've made a double top. What we should do is we should look at the long-term weekly to see, because this thing has been in such a bear market. You can see, what happens to these things once they start down. Natural gas at one time was selling for $13 per cubic foot, and or per cubic inch, whatever. How are they have it's in cubic centimeters, or whatever it is, but. It's been, it went from 13 down to 270, and now we're still back. We've doubled our price here in the past since 2012, but we're still far, far below where we were at any one time. That's true of almost all the commodities, and that's why it's cubic feet. That's correct. And someone corrected me on that. I was thinking it's cubic inches, but it's cubic feet. But if you look at all the commodities, they've been hit really hard, which is pretty much, we were expecting some of these things because they've been in such strong downtrends for such a long time. We've got a real important couple of days coming in here. We've got New Year's Eve will be a very slow day. I think they close the markets a little early on New Year's Eve too. But the big day to watch, folks, is January the 2nd. We have the 1st. We got the new moon coming in on the 31st and 1st. And then so January 2nd when we come in, that's either going to be a game changer or something is, it's going to be real interesting from this level is where we stand. We have a lot of people that are very, very bullish that don't expect anything to ever go wrong with the stock market. That in itself should scare the hell out of you. Whether that does or not, that's up to you. It does me, but I think it's also a great opportunity. Just keep your powder dry until you see the whites of their eyes, and we'll know something about it when we start to fill that gap in the Dow Jones down there at 16,360, which is 70 points away, and that'll be an interesting one. I have a request for crude oil because we've had a pretty good move in crude oil to the upside. It made a beautiful bottom down there on the 61% retracement down at $91 a barrel, and we have had a heck of a move, and I still think we're heading up to the 103 level without any trouble at all in the crude oil market, and that's what we'll watch that one very, very closely. Anyway, that's the Steve Rhodes just told us that there's also a gap on September the 3rd of 2010, but it's only $1.50, but it still hasn't been filled, and that's still it's still a gap. That means that all the stocks had to open higher that day. That's a very, very strong statistic. Live every day in an attitude of gratitude, my friends, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.